Morning, folks. Coming to you from the lounge. I've been kicked out of my office by my son who's visiting from China, so hence the weird background. Let's talk about this chart on natural gas. There are an awful lot of comments in YouTube saying, talking about horrible things, like someone saying someone they know died, and a couple of people had committed suicide and catastrophe, and people who saying they've lost everything or about to lose everything. I don't quite understand how people trade like that. It's not my business, as I said to reply in one comment. But please, if you're trading to the extent that you're wiping out your account with a 20-cent move, you're trading wrong, you're over leveraging, and quite frankly, you shouldn't be trading natural gas if that's the way you're going to be emotively and financially decimated by relatively small moves. This is the day chart in front of you. You can see this has not been a dramatic move. We're within the channel, we're within the range. We're still holding above this green support level, which I had drawn in and I pointed out on previous charts. Here's the 50-day moving average. There's the triple top. This red line in the middle is the divider between the new range that we've entered between $2.50 and $3, and the old range, which is between $2 and $2.50. We're still in the middle of that new range and in the middle of the channel. So we're right in the middle of the channel and the range, and we're holding above the 50 MA, and we're holding above this green support line, which I had drawn in on the previous charts. Please have a look at the last video. It's really important that you understand the overall strategy. We're not trying to make $1 million per trade and putting all in and going all in on a single trade. We're trying to manage a very volatile and risky and dangerous commodity to trade. We all know it moves 5 or 10% in a day on occasion, and we saw that over the last couple of days. But it's not catastrophic. It's pretty simple. There's the support. We've just fallen down into support on the day chart in the middle of the range and in the middle of the channel. And it's also a Fibonacci retracement level. It's somewhere between the 61.8 and the 78.6%. We could get down to the 78.6%, which is down here at around $2.55, 57, and we could get all the way back down to this triple bottom area, which is at $2.45. My strategy is simple. I'm now 50% long from $2.69. We're at $2.66 now, so I'm 3 cents out of the money on this trade, on this current trade, and we've taken plenty of profit as we've gone along. We've been generally buying at the bottom of this channel for the last number of months and exiting at the top. On this occasion, I added to my long trade about where we are now, and when we got back there, I just took that trade off at break even, and I've returned to a 50% position size. Now, what I think might happen is if we zoom into the 4-hour chart and have a closer look, you can see we're trying to form a bottom. We're just below that 4-hour 200 period moving average, which is not the best, but we've got various support levels beneath us, including that $2.45 range. My hedge is at $2.43. So if we get through 245 and get down into 243, I'll hedge my entire position and then wait to see what happens. So I'll be in long from 269, half a size, half a position, and then hedged at 243. Not a train smash at all. Now, there are all sorts of weather reports and conflicting ideas on storage and supply. There's the Australian strike thing, which I think may be resolved. And there's a traffic jam in the Panama Strait, I believe, which is causing some outflows to be halted from the US into Europe, and various things going on, which are difficult to gauge and difficult to tell. But overall, I still think the chart looks quite supportive. We've got the 78.6% Fibonacci down at about 257. We've got this range bottom at 245. We've got this triple bottom in place, which is pretty solid. What we're looking for now is a spike low or an engulfing pattern or something of that nature on the 4-hour chart to indicate that we are heading back upwards again. And I'm still aiming for $3 back to the top of this range over here, and potentially above $3 up into these higher ranges, which I pointed out on the video, which I'll link at the end of this one. So far so good, and we'll just have to wait and see what happens. So once again, for all of those of you who are panicking and getting into a complete situation and state, it's probably because you've over-leveraged, you've committed too much to one trade, you've got too much expectation to make fast and quick profits on natural gas. You may get lucky on occasion, and sometimes that happens, but it is a volatile and difficult commodity to trade. And if you're going to be trading it in a Rambo sort of fashion, going all in long or all in short, at some stage you're going to run into big problems and big trouble because you're going to be committed too much to one side or the other of the trade, and you're going to lose all of your money and get margin calls and that sort of thing. If you're in doubt about direction, one sensible thing to do is to hedge your position. That's something that I often do. And you can take time to consider the market and remove your hedge when you get the opportunity a little bit later on, and you take that rush and stress out of trading. I hope that's been helpful. That's my overall idea on natural gas. I'm still bullish for $3 and beyond, but it's going to take some time after these slight setbacks. This is not a major setback as many have espoused. This is just a pullback into support and to the Fibonacci levels and the 50-day moving average, as you saw on the day chart earlier, and there's still every hope that this will move up. We must allow, however, for a move down to 245 and even a break below there. We can't predict the markets, we can't predict the future. I don't know what's going to happen next, but at the moment I still remain on the bullish side. Hope you found that useful. Take care.